Hello everyone, welcome to today's webinar. I'm Rashmi and I'll be facilitating the webinar. Today I'm going to talk about independence requirements relating to SMSF audit engagement. I'll explain and try to illustrate with few examples how you can comply with this requirement. Main points of discussion will be threats to independence, factors that impact significance of a threat and the appropriate safeguards. I'll talk about some scenarios involving SMSFs in which independence requirements would be breached. It is very critical to understand all this to apply it while doing audits. Before we proceed further, I would like to tell you that I have uploaded handouts which you can download from your portal and refer to it. So let's move on. As you all know, legal requirement exists under SIS Act for trustees to have their fund audited annually, and as an auditor, you are obliged to carry out such an audit in accordance with auditing standards and also in compliance with the independence requirements of the Code of Ethics. The requirement to comply with independence is in various auditing standards. ASA 220 requires the auditor to form a conclusion on compliance with the independence requirements applying to the audit engagement, which are contained in the Code of Ethics. ASAE 3100 requires compliance with the fundamental ethical principles on compliance engagements, for which the concept of independence is integral. The SIS Act and the SIS regulations also requires the auditor to comply with auditor independence requirements which are prescribed by the APES 110, which is Code of Ethics for Professional Accountants. This all applies regardless of the size or simplicity or the level of complexity of the fund. Furthermore, this requirement applies regardless of how proficiently or thoroughly you may believe you can or able to carry out an audit. Also, as you all know, the auditor's report issued by the ATO is divided into two parts. Part A is financial report and Part B is compliance report. In addition, auditor's report requires the auditor to include a statement in the report that you have complied with the independence requirements which are prescribed by the SIS regulation and the competency standards set by ESIC. Therefore, the concept of independence is fundamental to compliance with the principles of integrity and objectivity and is also mandatory for undertaking all the audits. If you have any doubt about independence in carrying out an audit and you are unable to put appropriate safeguards in place, you should decline the audit engagement. My question to you is how you can assess independence. I think as part of the process in assessing independence, you may consider as a litmus test asking yourself whether you would have any hesitation in writing up any adverse finding or in qualifying an audit report. Let's say if there is any hesitation, it may be an indication that independence is impaired and you should give consideration to declining the audit engagement. Moving on further, independence requires both independence of mind and independence in appearance. Independence of mind is the state of mind that permits the expression of a conclusion without being affected by influences that compromise professional judgment. This allows you to act with integrity and exercise objectivity and professional skepticism. Independence in appearance is the avoidance of facts and circumstances that are so significant that an informed third party having knowledge of all the relevant information would reasonably conclude a firm's integrity has been compromised. The Code of Ethics provides a framework of principles that you can use to ensure that independence of mind and independence in appearance are not compromised. When assessing independence, you just have to follow these steps. First of all, identify situations that could threaten or appear to threaten your independence. Next step is to evaluate the significance of the threats by weighing all specific facts and circumstances. If threats are evaluated as significant, determine whether appropriate safeguards are available and are capable of being applied to eliminate or reduce threats to an acceptable level. In circumstances where appropriate safeguards are not available or cannot be applied, you need to consider again declining to perform the audit or discontinue the audit engagement. So, it is very important to identify any threats and evaluate the significance of those threats. I'll move on to the next slide and we'll discuss various threats. Threats may be created by a broad range of relationships and circumstances. A circumstance or relationship may create more than one threat, and a threat may affect compliance with more than one fundamental principle. Threats fall into one or more of the following categories. It can be self-interest threat, self-review threat, advocacy threat, familiarity threat, intimidation threat. I'll start with self-interest threat. It occurs when a firm or a member of the audit team could benefit from a financial interest in or other self-interest conflict with the client. For example, if the auditor, member of the audit team, or the immediate family member is a trustee or member of the fund. This threat will also occur if you rely on a single SMSF audit referral source for a significant amount of revenue. Self-review threat occurs when any product, such as financial report or a judgment of a previous engagement, needs to be re-evaluated in reaching conclusions on the audit so that the auditor is reviewing their own work. This could occur where a member of the audit team prepare the financial report or accounting records. I will discuss this in detail in later slides. Advocacy threat occurs when the auditor promotes the client's position to the point that objectivity may be compromised. For example, when you act as an advocate for the fund in litigation. Familiarity threat occurs when, by virtue of a close relationship with the client, the auditor becomes too sympathetic to the client's interest. For example, when a close family member of the auditor is a trustee or member of the fund, or where the auditor has a long association with the trustee. Intimidation threat occurs where the auditor is deterred from acting objectively by threats from the trustees of the SMSF or the advisors or the accountants of the trustee. This may also occur where an auditor is subject to pressure by a colleague in their own firm who has vested interest in retaining the client because they are the SMSF's accountant. This might occur, for example, if a threat of replacement over a disagreement with the application of an accounting principle, or the loss of general accounting or tax work if the auditor's opinion is modified or an ACR is submitted to the ATO. This threat may also arise where a SMSF administrator pressures the auditor to reduce inappropriately the extent of work performed in order to reduce fees. This situation will arise in circumstances where the administrator refers a significant number of audit clients. I'll move on to the next slide and we'll talk about the safeguards. Safeguards to independence may be created by the profession in legislation or regulation. maybe within the SMSF or within the firm's own systems and procedures. Safeguards created by the profession or regulation generally include external review of firm's quality control system or legislation covering the independence requirements of the firm. Safeguards within the fund may be limited, as many SMSFs are small entities with limited scope for segregation of duties. Hence, reliance on internal safeguards may not be possible, and you may rely on the safeguards created by the regulation and those created by internal systems within your firm. In evaluating threats to independence and considering applicable safeguards, you need to consider nature of the SMSF, the range of services provided to the client, and the relationship the auditor and the audit team have with the accountants and any other person who is involved with the management of the fund. I will now take up some scenarios involving SMSS in which independence requirements would be breached. In each of these cases, it would be expected that an auditor would decline an audit engagement. First scenario is you cannot audit a fund where you have prepared the accounts. There is some confusion about the meaning of paragraph 290.171 of APES 110, which refers to services related to the preparation of accounting records and financial statements being provided to an audit client that is not a public interest entity where the services are of routine or mechanical nature. As an example of this such services, the paragraph identifies preparing financial statements based on information in the trial balance. The paragraph refers to applying safeguards where necessary to eliminate the self-review threat or reduce it to an acceptable level. Examples of safeguards are given in the paragraph as arranging for such services to be performed by an individual who is not a member of the audit team, or if such services are performed by a member of the audit team using a senior staff member with appropriate expertise who is not a member of the audit team to review the work performed. It is the view of the joint accounting bodies that, in the context of the audit of SMSFs, it would always be necessary as a minimum to apply such safeguards. However, I consider that the scenario contemplated by paragraph 290.171 does not permit an individual auditor to take full professional responsibility for the preparation of financial records and then to provide an audit report on those financial statements. The paragraph contemplates a minimal, or you can say restricted, set of services of a routine or mechanical nature, requiring only a minor review, but where an accountant takes full responsibility for the preparation of financial statements in a manner which legally binds the accountant to the statements produced, then the self-review threat which arises would be so great that no safeguard could reduce the threat to an acceptable level. On this basis, a sole practitioner or their staff would be unable to both prepare the financial records and the audit them, because in this case they would be taking full professional responsibility for both the services. Second scenario is an auditor cannot audit their own SMSF. Paragraph 290.146 of APES 110 states that if a partner or employee of the firm serves as a director or officer of an audit client, the self-review and self-interest threats created would be so significant that no safeguards could reduce the threats to an acceptable level. Therefore, where a person is a member and trustee of an SMSF, that person would be unable to conduct the audit of that fund. Last scenario is an auditor cannot audit the fund where a partner within their own firm is a member or trustee of that fund. Like I was saying, again, by application of the provisions in paragraph 290.146, no audit can be undertaken in which a partner or employee of the auditor is a member or trustee of the fund. There are other important matters which I'll quickly take up and discuss. First is provision of taxation services to a fund. Where you are providing taxation services to a fund, which is also an audit client, this would not of itself create a threat to independence that could not be mitigated by safeguards. In case where you are providing financial advice to the fund, which is also an audit client, may create advocacy and self-review threats, but these threats may be reduced to an acceptably low level by safeguards such as implementing policies and procedures to prohibit individuals providing advice from making managerial decisions on behalf of the fund, or you can use staff and partners who are not members of the audit team to provide the financial advice. There are other important issues like where the audit firm or an individual partner is unduly reliant on the audit fees from a particular group of SMSFs, such as those funds referred by a single referral source. The concern about the possibility of losing the referrals may create a self-interest, advocacy, or intimidation threat. Safeguards in this case include diversifying the client base to spread the source of revenue so that the potential for undue influence is removed. You need to make sure that in situations in which no safeguards are available to reduce the threat to an acceptable level, the only possible actions are to eliminate the activities creating the threat or to refuse to accept or continue the audit engagement. We have tried to cover all these threats and safeguards in our audit tool. I will quickly show you where it is and how you can change it for any particular audit. Just give me a minute. I'll log in with my dummy credentials. Okay, I'm on the home page of the website, so I'll log in with as partner with partner at partner.com.au and the password is partner. It's slow. Okay, try to log in again. It's partner at partner.com.au. Password is partner. Now I'm on the SMSF Audit Manager page and I'll take any audit. I'll click on the in progress icon here. This will take me to the audit page. So you all know we have divided the audits in various tabs from A to I. So you need to complete all the tabs from A to G before you go and finalize the audit and generate the audit reports. We have got tab A here, which is scope of audit and pre-audit check. We have divided this tab in various sections to comply with all the auditing standards. For each of the heading here, you need to click on the plus icon and the page will expand. I will click on plus icon for the independence assessment and this will show you complete details which is there in the audit tool. Here we have covered all the threats and safeguards which are here, which you can add it as per your requirements. It is very easy. You just have to click on the more icon here, which is in blue, and it will expand. You can make the changes in this default note here, and then save it. It will form part of the audit working papers when you will finalize the audit and generate the audit reports. In case if you want to add anything for this section, you can add it from the notes icon here. I'll show you where it is. It is here. So if you wanna, if there is not here, anything is not here, and you want to mention that and want this note to be a part of the audit working papers, you can mention that here, and then you can save it. And this will go to the audit working papers too. And if you want to roll over to next year of audit and you have done the previous year of audit, you can also do it when you start the next year or audit. You can copy it from previous year. And if you want to try our audit tool, give me a call at 0296844199, and we'll go from there. And this is the end of the webinar. I hope you have enjoyed. If you have any questions, please email me at rushme@trustdeed.com.au. Also, we are running series of seminars, and if you like to gain more information, please register yourself on our website. Have a great day ahead. Thanks for your time. Bye.